Dan here from Trading with Dan. A very quick update I wanted to give you on some interesting stats that I've come across about gold. So what it is, the last 40 years, the percentage of global asset allocation to the precious metals asset class, so that's gold, silver, other precious metals, and their associated mining stocks, ETF funds and things like that. So the overall average the median global allocation over the last 40 years has been around 2.5%. The highest been 8% in 1980, and the lowest being 0.5%. So we're currently at 0.5% of global allocation to this asset class. So if you want to assume we can at least get to the median of 2.5% over the last 40 years, the median over the last 40 years of 2.5%, that would indicate a five-fold increase in the amount of assets allocated to, the amount of obviously capital allocated to this asset class. So yes, there are only so many. There's only so much exposure. There's only so much exposure available. Only so much physical gold available. Only so many good mining companies, mining shares, mining stocks available. So this sector could see a very good increase over the coming years. What is the main driver of gold at the moment is obviously the low, further falling global interest rates. Because the way you have to look at gold is an asset class which actually has a negative carry. So whilst it doesn't itself have a negative carry, as in just holding the gold, you obviously have to store the gold. And then that has associated fees, which then has as the net result of a negative carry. So that's why investors will historically invest in bonds, and other asset classes that will have a positive return, basically, other than obviously the potential capital value return. So what obviously with rates going negative, and if inflation is going to keep going down as well, that will make actual real rates even more negative. That will give obviously this other large asset class that has been soaking up a lot of the global capital. It will take away its advantage against gold, and gold obviously with its set value that's not subject to an inflation interest rate change, will obviously become more attractive, and that is obviously what is happening now and what is driving gold. So like the best ways to get exposure to this, obviously, the best way is to buy the actual physical gold, because if you have an ETF of gold, if you have paper gold, there's nothing to say that you can actually. The way you have to look at gold is like, it is an asset class, but it's an investment. It's an asset class, it's an investment, but it's sort of like an insurance. It's an insurance against like a potentially failing fiat monetary system, or just global governance and confidence in global currencies, in countries' currencies. So it's like one of those things. It's like, so you sort of have to understand it from the context of that greater financial system. So if you're not actually holding the physical gold, you're holding, like, say, exposures to gold in an ETF, and then the financial system goes. What do you think is going to happen to just your paper claims against the gold, when there isn't obviously enough of the physical gold to cover all the potential paper gains? Mining stock shares, mining stocks, gold, silver, precious metal, mining stocks, individual mining stock, taking a risk on any individual mining stock is obviously a big gamble, because there's all sorts of risks associated with any individual company, such as the countries they are operating can all of a sudden change tax laws, or even nationalize mines. Countries can nationalize mines, and then you also have the risk of capital raising. So any individual company, especially if these gold and silver prices keep going high and staying higher, they are going to come to the market with capital raises, and that's going to have a large impact on the share prices. So there's things to consider. So yeah, the GDX and the GDXJ. Obviously GDXJ being the juniors and the GDX being the senior miners. Rather than investing in an individual mining stock is I would say is the way to go, because you'll have a basket of the share of the various companies. You can't actually buy these on eToro, but there's royalty and streaming companies in the gold and silver sector, and they are an interesting play as well. But yeah, I mean, so you sort of have to think about the GDXJ is the higher risk, the high risk share. So you would expect if gold to keep going up, these will go up by more compared to the senior miners. But obviously, if we do get a bit of a correction, or prices falter, or whatever happens with the underlying price of gold, then they will obviously suffer a lot more than the majors. So yeah, that was it really. Just a quick update. Yeah, so I don't know. I'm new to eToro, so I thought I'd do some videos, make it a bit more interesting. Yeah, nearly at the end of the first month, 15% up in the first month. I hope to obviously keep that going every month, and yeah, and see how we get on. So yeah, thanks for listening, guys, and I hope that this was some benefit to you, this information, and then yeah, happy investing, happy trading, guys.